Singapore leads as India's largest FDI foreign direct investment source for seventh straight year. Singapore continued to be India's largest source of foreign direct investment for the last 7 years as the country received the highest inflows of about $15 billion in 2024-25. The overseas inflow grew 13% to $50 billion in the last fiscal. The total foreign direct investment, which includes equity inflows, reinvested earnings, and other capital, grew by 14% to $81.04 billion during the last financial year. It is the highest in the last 3 years. Foreign direct investment from Singapore in 2024-25 increased to $14.94 billion from $11.77 billion in 2023-24, according to the latest government data. Singapore accounted for around 19% of total inflows in 2024-25. Since 2018-19, Singapore has been the largest source of such investments in India. In 2017-18, India attracted the maximum foreign direct investment from Mauritius. In the last fiscal, the country received $8.34 billion US dollar in foreign inflows from Mauritius. During 2024-25, Mauritius was followed by the US, that is $5.45 billion US dollar, the Netherlands $4.62 billion US dollar, the UAE $3.12 billion US dollar, Japan $2.47 billion US dollar, Cyprus $1.2 billion US dollar, and UK with $795 million US dollar, Germany with $469 million US dollar, and Cayman Islands with $371 million US dollar. According to experts, Singapore's position as a global financial hub, combined with strong bilateral ties and its role as a gateway for global private equity and venture capital, makes it a natural conduit for investments into India. Rumki Majumdar, economist Deloitte India, said despite turmoil in the capital markets and uncertainties around trade, India has managed to attract huge investments which are stable and long term. Given that Asia is the second largest region to receive foreign capital inflows, a large part of the funds come from Singapore. There are quite a few reasons for that. One being a low tax jurisdiction and with a robust legal framework, Singapore is considered the strategic financial gateway to Asia. She said, double tax avoidance agreement between the two nations helps all Singapore-based organizations to invest in India and reduce the total tax burden on income earned from India, Majumdar added. Lokesh Shah, partner Indus Law, said the India-Singapore tax treaty was one of the major drivers of foreign direct investment. Singapore's continued dominance in India foreign direct investment now relies more on genuine business and regulatory advantages. Singapore's sophisticated financial market, its status as a regional hub, and a political and economic stability, Shah said. Rudra Kumar Pandey, partner of Shardul Amarchanda Mangaldas and Company, said that while Singapore will continue to be a significant and active investor in India, the landscape is gradually evolving. Singapore's rising FDI into India is anchored in its role as a global financial hub, home to a large number of international private equity and venture capital funds, Pandey said. These investors see India as a high growth destination, particularly in sectors like financial services, banking, insurance, business process outsourcing, logistics, computer software and hardware, trading, telecommunications and pharmaceuticals, and use Singapore as a key base to manage and deploy capital across Asia, he added. Foreign investments are crucial for India to overhaul its infrastructure like ports, airports and highways to push growth. Foreign direct investment also helps improve the country's balance of payments situation and strengthen the rupee's value against other global currencies, especially the US dollar. Thank you for listening. Thank you for watching. Thank you everyone. Bye.